Thank you, everyone, for coming. So, my name is Aryan Gandhi. I'm the founder of Build Illinois, an organization focused on promoting serendipity on campus.
My name is Vikram Pidaparthi. I'm currently a sophomore, part of the Line Up blockchain, part of the development team, and we're essentially focused on introducing more people to the Web3 space, crypto in general.
Awesome. And so, with us today, we have Paul. Paul is the founder of Decasonic. It is a firm focused on building blockchain innovation for the global mainstream. Before Decasonic, Paul attended Yale University, after which he was a .com VC and then joined social gaming company Zynga and had a couple roles in between and then started Decasonic. So I'm super psyched to dig in today. But the way this is going to work is we're going to host about a 30-minute conversation between us and Paul, and then we'll open up to the audience for questions. So if anything speaks out at you from what we're talking about, write it down or take note. And so when we get to the audience section, you guys can ask about that. But I think super psyched. So how are you today?
Yeah, thanks for having me. It's always a pleasure coming down to campus from Chicago. A lot of respect for out of this university, and just honored to share a stage with you all today.
Awesome. All right, so let's hop into it. So I want to start at your childhood. So what was there anything unique that went on during your childhood? Like, were you spending a lot of time, I don't know, doing math or like building things, or talk me through that?
I think a lot of immigrant families have a lot of respect for their ancestors. And, my parents moved to this country for the American dream, and a lot of that American dream reflects hard work and education. It reflects, kind of this do or die mindset around you learn technology to create a better life for ourselves, our families, our parents, and for society. Uh, my parents are entrepreneurs. They bought a PC for me and my brothers when I was 6. Face basic, and my parents would bug us about playing games on it all day. You're in your adolescent years. My parents never pushed us to study hard. I think it was very much self-driven by me and my brothers. When you have 3 younger brothers, you try to compete. When you're kind of an outsider without a lot of social skill. Dad always had the aspiration of, Yale's in our backyard. You could see your goals and go study hard to get into a better academic institution. And it is that internal competitiveness that I think attracts me to emerging technologies today. Yeah. I'm so jealous of your youth, your clean slate to change the world. I think that's so ahead of you guys that just always honored to talk to energetic ideas you guys have.
So then on that topic, so you get into Yale, graduate summa cum laude, so that's a 3.7 math, statistics, econometrics, and international growth, and you have 3+ internships a year, right? So walk me through what is College Paul thinking? Like he's obviously very busy and
Sure.
working on a lot of things.
Sure.
Like, walk me through that process.
I applied to Yale early. It's in my backyard. I had the luck to take Yale classes before I went to Yale and carried a 4.0 into college. So you have something familiar. It was de-risking. I'm fascinated by the technology at that time was .com. I mean, it wasn't so clear that the open internet.com would beat AOL or Prodigy or CompuServe. It was this counterculture of open internet against the information superhighway that was being catalyzed at that time. In 1996, the Telecommunications Act had liberalized a lot of these technologies for startups to enter into this space. Famously, my first email was on a Unix terminal. You'd have to type into minerva.yale.edu. The Mosaic browser was launched. We were one of 6 terminals that had Mark Andreessen's work. And you'd surf this thing saying like, wow, it's not as good as Prodigy or AOL, but it's the open internet. Senior year, Netscape had IPO'd and you'd had a lot of the .com internet services. I knew I was hooked on emerging technology. I knew what technology was doing to influence culture. I remember my senior year, my senior, roommate said, "Hey, I think we should buy up some of these WWWs. Yeah, that might be big one day." You're like kind of sitting here trying to figure out domain name registry, and that was a lot of my college experience of, hey, things are changing fast, and of course, as someone who didn't have access to the Silicon Valley networks or some of the opportunities in the internet, you just started working extremely hard to understand and adapt to that change. I overloaded a lot of classes, took a lot of diverse classes around math, econ, statistics, composing classwork that is today modern day data science. So it ends up being data science. And this interest I had around writing with numbers, that was my core fascination. How do you write qualitatively with the quantitative bent? Was very lucky to have paid off my student loans with a Wall Street analyst job. That then took me with an internal transfer out to Silicon Valley in 1999 at the heart of this dot-com bubble. Run into bubbles, we look at the gold rushes and we want to be a part of it. We want to be a part of it. And so was lucky to have experienced college in that dot-com boom. Yet today, in 2021, 2022, 2023, you have a Web3 or AI boom going on. So you see history repeat itself. And again, I'm just so lucky to have these two phases, these two transformational paradigm shifts that we college experience in some respects of that time period.
Yeah. So based on you going through that boom, advice you have for all of us, maybe it's some mistake you made or something you didn't see or things you did that you think we should take advantage of right now?
In .com, it's much harder to access best-in-class people, best-in-class technologies, best-in-class companies. This was still dial-up internet. Not everything was indexed on the internet. You had to go to career services, look up paper directories, try and call people on the phone to ask for their time. You guys have such a big luxury of accessibility with Chase, myself, Danny, world-class people in our respective fields, and ask for their time. You have access to open repos on GitHub. You have access to the best techniques on YouTube. That open knowledge, the open innovation, the ability to just raise $20,000 and get something off the ground was not an opportunity afforded to my generation during that time. But it is the opportunity today. And I'm, again, so jealous of that open innovation, open community of ideas that I think you guys can tap into. And it was so different than that prior generation.
I wanted to interject real quick and ask if we were to rewind a little bit back to your idea of like one of your friends came up to you and were like, hey, let's invest in like www in the future. And that sort of open-mindedness to explore different things, especially in your college careers. I was wondering if you can tell us a little bit about how you were able to pinpoint different ideas or firms or things that caught your head, that caught your eyes, and how you were able to kind of act upon those ideas.
I think as a venture capitalist by background, Decasonic is a early stage venture and digital assets fund. We look to write first checks into entrepreneurs like yourself. We fund it with $1 to $2.5 million. And we do take idea risk. We do take founding team risk. We certainly take pre-product, pre-revenue risk. The one lesson I'll share with everyone in this line of business of being on the frontier of these ideas, the worst ideas are sometimes the best ideas. The non-consensus ideas are generally the best lucrative ideas if you can shift those non-consensus ideas to consensus. If you can shift illiquid assets to liquid assets, that's a tremendous opportunity to scale 100Xers, billion-dollar companies. If it's a consensus idea and you're right, you win 3 to 5X barely. It's combed over. The markets are too efficient these days. That the crowdsourced innovations crowd into that idea. You do have to work in these areas of non-consensus, and if you work in ideas of non-consensus, you're not necessarily right 100% of the time. The back testing, the hindsight capital is always 2020. The hindsight is always 2020. You could say, oh, I knew about this, but actually, you need to strike out probably 90% of the time to find that 100.
Okay. No, so let's we'll dive into a little bit about Decasonic in general. Could you talk to us about the origins of Decasonic and how exactly this VC came about, and what were your initial thought processes and ideas into how to make this firm extremely popular, extremely successful?
Decasonic was founded in 2018, but the origin story probably goes back closer to college. It's so easy to take a linear career path. It's so easy to say, let me take the safe path of being a physician, being a lawyer, being an accountant, being an investment banker. People like me who come from immigrant families, you take the higher floor, higher unlimited upside situations. How can you use your education to have a high floor? I can always go back and get a job. But if you're going to work extremely hard, the meritocracy should give you $1 million returns. It should give you more upside. So a lot of that mindset came from college. A lot of the counterculture, non-consensus was not to take these linear jobs or progressive jobs, not care about titles, but care more about the outcomes, the results that you would drive. So had a passion to do startups or venture capital even back then. That was very non-consensus. Was a dot-com venture capitalist at a $300 million venture fund. So sat on the front lines of now all these peers of my generation who are famous in the news. I mean, they all built the disruptive companies with network effects, flywheels. A lot of the concepts you hear about today was invented by my generation. That venture experience influenced me to go get my operating experience. So after a decade on joined Zynga as an early employee, social gaming, using data to drive product development, hypergrowth. How do you look at cohorts and use statistical methods to predict buyer conversion? It was there that inspired me to enter cryptocurrencies. Gaming assets look very similar to crypto assets. Bought my first Bitcoin in 20 personal portfolio. And you look at your dollar, you're like, the non-consensus is to quit everything you had and go start a company. So Decasonic was started. We moved to Chicago to be closer to the blockchain infrastructure. That was a non-consensus move. Moved from Silicon Valley here to be closer to engineering teams like you guys. I have so much respect for UIUC. Just recently, you guys were third in the nation with this type of expertise. I know Jake, and it's impressive how much engineering talent comes from this school, University of Chicago, Northwestern. A lot of Silicon Valley people appreciate the Midwestern engineering talent. And so we moved here in 2018, closed this fund 2.5 years ago, as we shifted from just friends and family money, investing friends and family money, into institutional money.
So I wanted to talk a little bit more about that. So last year in early January, you guys partnered with the Disruptive Innovation Venture and Digital Asset Fund. So I was wondering if you could talk to us a little bit about how you guys go about, advising and building these funds that you decided to invest in, and what kind of goes into the thought process of choosing one firm over the other, or one idea over the other.
Sure. So our fund is a venture fund. So we invest in startup companies, and they can range as small as 2 people, business plan and an idea, to post-revenue type of situation. Danny Pantuso is my colleague. He's also a venture investor. He and I along with our team, look at about 200 thesis, market map, and hone in on our conviction bets on where we should generate expertise and go help scale a company. We will sit side by side with founders to poke and prod and battle test, ideas, understand up and down 360 where things can fail. Once you shore up where things can fail, you can then grow the upside. We look at founders who have that winner mindset, this grit that perseveres through all bear markets, and that do or die hustle that, frankly, breaks through walls. To build billion-dollar businesses takes that kind of mindset. We are very direct with negative feedback. We embrace negative feedback. We embrace these areas of non-consensus to push through and, frankly, outcompete them.
It's not seen as something you should do in school, like in general, to give people like
Sure.
everything in a positive light, right? So why did you take that approach of negative feedback, and why is it working for you guys?
Great question. I think I'll give two quick examples. My experience with the best performers in the world, regardless of industry, is that they're able to sort through actionable feedback versus noise feedback. And being told you're great it isn't actionable feedback. As much as school trains you to get A pluses or whatever, that's not really how you break through to achieve the next level. And I'm an expert beginner. I love taking up new hobbies and I love exploring new things. As you're ramping up on an aptitude in a particular skill set, everything's new, everything's fun. At some point, once you reach a certain level of mastery, you're grinding out nuances of exercise. You have to find that small edge that amplifies into big gains of mastery. And without embracing negative feedback, it's hard to find that. It's hard to find that actual feedback. Embracing, adapting, prioritizing which negative feedback to embrace is generally kind of how world-class people operate, And, I generally pride myself on not being full of drama. I'm nice and pleasant in my personal life, but professionally, I have a lot of respect for people who will just who will shoot very straight, give direct feedback that's constructive and productive. It's non-emotional enough to offend people. And certainly sometimes when I get feedback and it's hurtful, I cry in my room and then come back and take action. You have to embrace that mindset to look at actionable feedback, constructive feedback. As a venture investor, some of our best companies, some of our best founders have that ability to take any and all feedback, disregard all that negative Twitter feedback that could be noise, but listen to the right people to drive their companies to the next level. We're always looking for that break.
I wanted to talk a little bit more about branching off of that. So when it comes to negative feedback, especially within the Web3 and crypto space, there recently, because of like the sort of like bearish market, it's kind of been a lot. There's kind of been a lot of negative feedback within this space.
Sure.
And you guys still continue to persevere during this time.
Yep.
So I'm curious, what was going through this kind of sort of dip in the crypto space, especially since you guys are sort of specializing with that field? How did you guys face adversity? How did you guys overcome adversity within this sort of period of time?
Yeah, great question. I think for consideration, what the media talks about Web3 is so different than what we see day to day, and that bridge of perception versus reality is another area of big venture returns, but also big startup returns. The media loves to cover Sam Bankman-Fried, all the fraud, all the regulatory stuff. When you peel back and you look at the true adoption numbers, we've normalized, we've bounced off of 2020 levels. Every asset class had a distortion in 21 and 22, we all corrected. All asset classes are going through their transitional periods. Web3 seemed to have settled and we're bounced. We're above 2020 levels on token prices. We're above 2020 levels on venture financing. We're above 2020 levels on adoption indexes. We're above 2020 levels on unique venture investor accounts, developer accounts. So, for a lot of leading indicators, you're seeing something similar to .com in 2001, when famously Amazon was $1 in price, and their adoption metrics were hitting on all cylinders. That is such a unique transitional period today. I pointed out for, again, you guys, because you'll learn this in your 20, 30, 40, 50-year career, that there are very few periods like today for Web3. And as a venture investor looking for talent, this is such a great period to be building. And you don't get the hype. It's so normalized. It's so much calmer. For someone like me who lived through .com is far more painful than Web3 today. We bounced. And when you dig through the ideas, you see the growth, you see the corporate interest into our particular use cases, it gives me a lot of hope.
Your main office is in Chicago, and you
Yes.
have a couple other offices in like New York, right?
We have partners out there, but our main office is in Chicago. I'm very optimistic about Chicago. I sit on the board of directors for the World of Business Chicago Inclusive Economic. I share with a lot of my Silicon Valley coastal friends that Chicago, at least for me and my stage of life, which I believe transcends a lot of other people, it's very community oriented. We have our oldest daughter in Chicago public schools, and it's so great seeing her have a diversity in not just racial backgrounds, professions, socioeconomic, diversity of thought. And so there's so much about this community that's so different than the three other cities I've lived in: Tokyo, New York, San Francisco. There's so much of a talent that is so much about substance. It's like, you talk to Daniel and myself, we're substance people first. We'll polish things up with product marketing, but we love the deep, insightful conversations we have with either builders, innovators, venture capitalists in Chicago versus some of the fluffy conversations that people don't follow through on necessarily in other industries. So diversity, substance, and community are generally reasons why I'm here, and I think it really extends to a lot of other people.
So let's talk a little bit more about the different diversity of thought, in the sense that there's so many different areas within Web3 that people explore. And recently, it sounds like you have a lot of optimism with combining Web3 with AI.
Sure.
And so I was wondering if you could talk to me a little bit about what exactly within that area you're kind of optimistic about, and how exactly that's impacted what firms are kind of looking for within the space of investing.
We're interested in the intersection of disruptive technology. So Web3 and AI is one. Web3 and mixed reality is another one. We do look at verticalized applications, Web3 commerce, Web3 gaming. Our investors in the mainstream adoption of disruptive technologies like Web3, AI, blockchain, metaverse. And with that approach, we're humble enough to know we need to rely on domain experts to build transformative applications. We are applications investors, consumer internet investors, different than infrastructure investors. And with that mindset, I spend a lot of time in mainstream America, St. Louis, Chicago, DC, Denver. You're closer to the mainstream. You understand how TikTok works there than on the coast or in Tokyo. That's distorted cohorts. Mainstream, mainstream are in these cities, and this is how families live. This is how industries work. So these intersection of technologies always require this domain expertise, some sort of edge around an insight of usage that can drive a differentiated product market fit versus our competitors.
It's also important. So when you have such a positive outlook on the future of when it comes to Web3, metaverse, things like that, it's also important to have like a couple qualms or like, hey, like, is this actually a good idea? So I was wondering, in the future, is there something that you're worried about, but not necessarily worried about, but something that you're a little, hey, this might not be the best idea, but it's something I definitely want to look into some more. You know, anything in the future?
I'll answer that in two different ways. We get exposed to about 5 to 10,000 ideas a year. So I mean, as much as we want to like every idea, it's hard to like every idea. You always have to prioritize ideas. And a lot of our reasons for passing generally relate to too small or not durable. Hey, it might be a one trick pony. It might be a pop and drop. Those are harder for us as venture investors to invest and build around when it's like, look, it could be life-changing money for someone to just chase something for 2 years and sunset it. Yeah. The other concept that I leave with people on, and this is something I try to evangelize with, innovators like yourself. Code is neutral. Words are neutral. I think there's a polarization going on in both technology and in the world to weaponize these neutral words can hurt people, words can flourish people. Code can hurt people, code can flourish people. AI can have biases and ethics that are very questionable. And depending on which jurisdiction you live in, whether it's a communist, socialist, purely libertarian, the whole range, you could make ethical questions about whether AI is flourishing people or destroying people. The one call to action I would ask everyone is to put those guardrails, be self-aware about those ethics, to direct code and words towards responsible innovation. Danny and I truly live and breathe this. We want to direct our work to positive change in society. And it's not to say, we're not for profit. We're for purpose and for profit. We are driving a better world through responsible innovation. And I do share that with everyone here because we do have that power. And it's upon us to drive inclusive growth. That's a lot of the reason why I am in Web3. I believe inclusive financial inclusion stems from Web3 tokens, Web3 technologies, more so than any other technologies.
Right now, it's not a matter of if we can do it, it's a matter of should we do it.
Or how we do it.
Or how we do it, exactly.
Because I think there are a lot of people deploying technologies for who knows what right now, and it's risky. Mm-hmm. It is risky.
Mm-hmm. So real quickly, I wanted to ask you if you could tell us an example of something you invested in recently, an idea that you thought to be super cool.
I'll just say, super cool might not be super profitable sometimes. Yeah, you could fall in love with companies and just hate the deals. Mm-hmm. Recent investment in a company that's doing generative AI for game production. So you're seeing artists side by side with scenario software, workflow software to enhance their work. An investor, lead investor in Forum 3, they're building out the Starbucks Odyssey NFT. And you're seeing a lot of NFTs get deployed by Disney and other Nike and other. That's a very much consumer use case that is underappreciated. That has large potential.
So there's so much more we could talk about in all of this stuff, but I think we should move. His ambition and everything else could take second seat to something in this world. And so how do you feel like being a girl dad has changed you?
I don't know if my ambition took a second seat like Paul. Yeah. It might have turbocharged my ambition. So much I throw into professional that's to build for the long term. You just create a different mindset when you have daughters and sons. I think about generational change. I want to leave the world a better place. It really solidified our values on our Decasonic website, decasonic.com/our values. I think you do start to think about generational impact. at least for me, and the generational ambitions that you can leave the world a better place. Uh, it makes me appreciate kind of what you guys have ahead of you and how you can influence, and manage my daughters one day. So I think a lot about that, and growing up with brothers and uncles and grandfathers. I was never exposed to girls, and now I see the world through their lens, their perspectives. I relive childhood through their joys. My daughter loves to ride her scooter to school, and it's one of the best things for me. I need to leave early tonight because I'm trying to tuck her into bed tonight. But it gives you this purpose to drive generational change for me. It turbocharged my ambition from a personal ambition or a family ambition to a.
Thank you. If anyone else has any questions, thank you for talking with.
Absolutely. Thank you for having me.
Yeah, thank you.
So with founders that you've worked with that you've seen to be generally successful, what are some traits or skills that you notice in them, and what can we do as college students to start building those skills now, rather than be too late?
Obviously, a very subjective answer. I find that the best founders are pursuing greatness. They know what's great, and they define great as their impact in the world rather than a relative competitive greatness. They're not trying to optimize for market share. They're building great iconic companies because of this long-term perspective. Amazon, think of that as the unlimited desires for consumer experiences. Mark Zuckerberg thinks about it differently, but it's always this mindset of greatness. And of our founders who operate this way, and I try to match that kind of perspective as well. And as a college student, I think you have exposure to a lot of great professors, great resources here, great students, great friends. I wish I tapped into that a little bit more, but never keep surrounding yourself with that greatness even after college. Find people, find a partner who's going to flourish you, who's going to make you better, who's going to tap into your potential. I think that's generally how we view venture capital. If I can't make your company 10x better, frankly, don't take my money. We want to work with
consensus. So I was wondering, did you ever experience a challenge with that, as non-consensus can often fail and it's all very risky?
Great question. A lot of people fear non-consensus. It's uncomfortable working in areas where you're an outsider. And so a statistical way to think about non-consensus is by definition, more often than not, you're going to be wrong, right? And so now it's the question of what should be your baseline expectations of how often should you be wrong? Should you be wrong 99% of the time? Should you be wrong 90% of the time? And when you do fail, how should you emotionally adapt to that failure? And people forget, in any innovation, 99% failure is the base rate. It's the standard. So if you're 2% correct, you double the success of base rate. And that's hard to comprehend. It's hard to adapt. The only way to survive those odds, those probabilities, is to take 100 swings at something, right? And embrace 99% failure. Most people don't get to 99 swings. That's the hardest thing. They expect, hey, I tried once and I failed. I tried another, I failed. Well, let me go get a job somewhere. Very few people swing that lucky, And so now, if you believe in that, the exercise I do share with a lot of people is to consider your day-to-day activities through the lens of what might be life-changing. Yeah. And often, more often than not, when I introduce this concept, people are like, oh, life-changing. Oh, yeah, it sounds interesting. But until you think about life changers, you don't recognize life changers. You can't recognize your luck. Life changing people generally think of it as like, hey, I met my wife, or yeah, I won the lottery, right? When in fact, I would say you probably come across life changing decisions every day, you know, and you just don't recognize it. Today might be life changing for you. Maybe not. Maybe Paul wasn't persuasive enough for you to lean into blockchain. It could be. You could get lucky and make a random connection, and that person can give you a job after graduation, train you up to be a world-class entrepreneur, and it was the lucky break you needed. You know, and that was 1 in 100 situation where, yeah, until you go meet a lot of people and fail 99% of the time, you wouldn't know if that's a life-changing situation. So generally speaking, that framework, I always think about like, how do you manufacture life-changing situations at a rapid clip? It might be a book you read, it might be something. And most often than not, when you think something might be life-changing, it generally doesn't turn out life-changing. And so you fail at it. But now you're training yourself up on disappointment of anticipation, the expectation that something might be life changing, and it doesn't turn out that way. But until you can embrace that failure, know that the base rate failure is 99%, it's very hard to embrace non-consensus negative.
How do you find signal from noise and like kind of find these like moments of non-consensus and like these big like tech booms, like whether it be Web3?
So how do you find signal from noise? Step one, most signal is faint signal. So it's very hard to find signal from noise. There are very few strong signals. And even the strong signals that present themselves can sometimes be overhyped. Let me just ask the question back. What's been a strong signal in technology adoption in the last year? Last 12 months? Web devs, one, the announcement of GPT Store. Some people think that's a strong signal. I don't know. Like Dan and I debate this all the time of like AI agents. He's bullish on AI agents. I draw back from history and say, I've seen it before, but maybe I'm a curmudgeon and I don't believe in they're just software bots or and so you could debate with true data around is that signal or noise, but generative AI has been what possibly could be a paradigm shift, but that's such a strong signal. You often don't get those strong signals because even in retrospect, having lived through the App Store launch, that wasn't so obvious. Having lived through some of these companies that VCs combed over and passed 100 times, that wasn't such a strong signal. It's such a faint signal. So Danny and I, through our investment work, we do monitor a lot of signals, kind of like searching for aliens. And if one blips and pops or shows a characteristic, we debate it. We'll drive 2 hours and just talk about some of these faint signals. On the other hand, now, I think there are entrepreneurs who are able to shape the world, bend that reality to manufacture signals or noise into signal. And the power of that entrepreneurship to shape the world to what you believe should happen is almost an unfair advantage that venture capitalists and top founders do. So there's a passive approach of signals and noise. We're active investors. So if we believe in responsible innovation, ethical AI, we're going to post about it. Come talk to us if you have that energy, passion, inspiration to go drive that. And I'm pretty sure if we put our heads together, we could go drive that signal so it's much stronger. We believe in shaping that world and taking control of how the world should flourish people's lives. So, there's that aspect that Silicon Valley does believe in that I'm tremendously trained and motivated by. And I would encourage a lot of you to reach out to Danny or myself or Lauren when you have those ideas. I'm pretty sure you have those ideas. I can't promise that I can respond to every email, but I know you have those ideas. Run them by us, and we're always happy to, battle test them with us.
So you're talking about day to day, like there's things day to day that could be life changing. You mentioned that a book could change your life. So
Yep.
is there?
Yeah, a lot of books. Yeah.
These
So
are top three.
yeah, so certainly check out our podcast that Danny is a host, Blockchain for the Billions. It did transform my life. Christensen, Disruptive Innovations. I read it at a time when, yeah, I wasn't sure if I was going to start something or work first, and I didn't do it until later in my career anyway. But Disruptive Innovations was the business school classic around how startups can outcompete incumbents and how you can build toys and games and disrupt consumer experiences that legacy companies were missing. That motivated my generation of entrepreneurs and venture investors. It then led to other concepts around network effects, flywheels, product cycles, Jaker. A lot of the disruptive business techniques stemmed from that classic. But not to say you have to go read it, but for me, it was profoundly influential in the role of startups, venture capital to go drive market leader.
Anyone else have? Sorry.
True Web3 future. Wish I had that crystal ball. In my world, Danny and I track hundreds of use cases. We map this along infrastructure to applications, layer 1 to layer 7. That's the .com in me, the traditional internet investor in me. And blockchain today, they just capture layer 1 and layer 2. I don't know what happened to the other 5 layers, but application people like me track the other layers. We also track customer segments from Web3 native crypto degens, crypto traders to the mainstream. And then there's a whole diversity around what would have product market fit there. We also bifurcate the world in terms of financial use cases and non-financial use cases. What's accelerating today are the financial use cases, less so in terms of crypto trading, stable coins, real world assets, tokenization, international money transfer. Those are just use cases that are likely to decimate a lot of the jobs in the financial industry. It's streamlining this money transfer, middleman situation. You're seeing a lot of change in the financial use cases of blockchain, Web3. In the non-financial use cases, we invest along a few visions. Web3 will transform how you engage with brands. So I'm very much influenced by rewards, tools. That's our Web3 commerce thesis. Gaming is tip of the sphere for product innovation. How gaming designs fun experiences is how the world will shift towards. And so there's a lot of Web3 in gaming that we see on the front lines. And then lastly, I think we're starting to see a mixed reality future, immersive internet. My daughter loves Quest 3 goggles. And I put that on her and you can't rip it off of her. She loves the interactivity of three-dimensional spatial computing. And with Vision Pro, Apple Vision Pro shipping this Christmas, you are seeing a new world of AI devices, mixed reality devices that are just going to transform how we might engage in retail, real estate, housing. I think that those are some of the use cases that we're actively looking for deals in and trying to shape the future.
So you mentioned.
We're making those bets by grilling founders into how do you get to profitability, right? Like myself can dissect a product roadmap, a product experience to suggest with credibility and data around here's how you monetize or here's how you build a sustainable business model. A lot of our conversations day to day are around durable business model. Interest rates are zero and there's so much money going into the economy. Not a lot of people were asking those questions. Is loss leading to something? But if there's an early expertise you can build in your career, it would be that. How do you find business models? How do you go build business models? How do you commercialize the technology into something that customers will pay you for? And so again, Danny sits on the front lines of my battle testing with founders of like, well, I went through your whole product, and if I were a VIP spender, I max out at spending $20 in your app. It's like, well, I'm pretty sure you left 10x money on the table. I'm willing to pay you $20,000, and you provided no avenue for that. And that's a very simple exercise to just go through, product experience and say, well, you left a lot of money on the table. You left 10x money on the table by not offering a higher price point somewhere in your product experience. But business models are tremendously hard to build. It's tremendously hard to align with customer experiences, but the people who can do it tremendously well are tremendously successful. And I wish I had your distractions versus my distractions. Like I think that's a lot of life. What is great about your situation is you're able to make decisions and priorities around optionality. You don't have to close too many doors yet. You might have to pick some doors, but you study electrical engineering. You could still go into medicine. You could still do law. You could still work at an internet company. But if you pick humanities, maybe you can't do two of those three. I think that there are universal values that are universal decisions you can make that preserve optionality. I know there are universal values of ethics and behavior and being a decent person that will always open doors for you. I know, prioritizing EQ and understanding how to sell your ideas, how to evangelize your ideas is always a good priority of stuff to work on. But I think at the highest level, creating optionality with your decisions can increase the surface area for your luck. I think that's someone like me who believes in life changers. I always think about increasing surface area for luck.
Who are some role models that you look up to and you try to that you think actually left that positive change in the world that we can also kind of follow?
So and so famous person. I look up to my parents. I don't know if I'm skipping your question by saying that, but I'm someone who is self-driven from a perspective of I look for the best in people. I learned that from my parents, and I can learn from everyone's perfect. What you see in the media about people generally isn't who they are. But there's always something to learn from someone. That truly does come from my mom and dad. Thank you for having me. I think I have so much respect for you. See so much jealousy of where you are in life today. Build that future for responsible innovation for our future generation.
The message, and with that, ladies and gentlemen, Paul.
Thank you.